All right, welcome back, everyone. Grab your calculators and a notepad right now, because today we are unpacking a module that is literally an absolute powerhouse for your exam prep. We're talking accrued and prepaid income for IGCE Accounting 0452. Now, if you're aiming for that A-star grade, you've got to know this isn't just some basic record-keeping exercise. No way. This topic is the fundamental bridge between everyday data entry and high-level financial intelligence. It's really about seeing the story behind the numbers. Okay. Let's dive into this explainer and build your blueprint to success.
Here is our roadmap for today. 1. The core concepts. 2. Step-by-step technical execution. 3. Ratios and evaluation. And 4. Examiner's secrets to success.
Starting off with Section 1, the core concepts. This is your foundation for that A-star.
So we're starting right at the base layer of our blueprint. What you need to understand right out of the gate is that mastering this topic is a core architectural requirement for your entire accounting knowledge. To lay a rock-solid foundation, let's quickly look at the upcoming Cambridge 2026 syllabus updates. They've shifted to modern international terminology. And listen up, this is a massive insider tip you absolutely must take seriously. You have to use the exact terms irrecoverable debts and owner's equity with 100% accuracy. The days of writing bad debts are totally gone. Examiners are looking for precision here, so locking down this updated vocabulary is step 1 of our recap.
Now, that same precision definitely applies to the golden rule of accounting. You have to understand the duality of every single transaction and how the business entity concept applies. This means the accounting equation, assets equals liabilities plus equity, has to be maintained at all times during the fiscal period. Every accrued expense or prepaid income adjustment you make is going to ripple right through this equation, and keeping it perfectly balanced is non-negotiable. Let's do a rapid-fire example. If you prepay rent, your asset of prepaid rent increases, but your asset of cash decreases by the exact same amount. The scales never tip. The equation stays perfectly balanced every single time.
Notice how the math ties directly into the ethics of accounting? We really have to analyze the historical cost principle and the prudence concept here. A huge trap students fall into is overstating profits by just kind of ignoring potential losses, and that is a direct violation of the prudence principle. Let's say a customer owes you $500, but they've just declared bankruptcy. If you don't write that off as an irrecoverable debt, your assets are falsely inflated. Prudence means you must record that loss immediately. You also need to master specific vocabulary, words like accrued, prepaid, realization, and consistency, so you can confidently apply them to those complex, multi-layered business scenarios you're going to face in Paper 2. And why does this all matter? Well, because stakeholders, like the banks, the owners, the tax authorities, they rely absolutely on the transparency and integrity of these records to make their annual decisions.
Okay, moving right along to Section 2, step-by-step technical execution. Let's look at the procedural guide.
Let's move to and see how this builds. We're transitioning from theory into practice. This requires a highly methodological approach, because in the IGCSE exam, method marks are a lifesaver. Even if your final balance is slightly off, if your logical flow is visible to the examiner, you secure points. You've got to show all your workings. Let's map this out with a quick worked example. Imagine a business entity pays an annual insurance premium of $1,200 in September, but their fiscal year ends in December. Step 1, we identify the invoice for $1,200. That feeds directly into Step 2, your books of prime entry. From there, we move to Step 3, constructing the T accounts, which then populates Step 4, the trial balance. And finally, that accurate trial balance flows effortlessly into Step 5, the final financial statements of the business entity. It's like a giant puzzle coming together beautifully.
Now, Step 3 is where a lot of the magic and, honestly, the mistakes happen. The exam will often use the exact command word, prepare the insurance account. So applying our $1,200 annual insurance example paid in September, you've really only used 4 months of that insurance by December. That means 8 months or $800 is prepaid. You absolutely must correctly enter that $800 prepaid portion as a balance carried down on the credit side at year end, ensuring it becomes a debit balance brought down for the start of the next period. Confusing these two balances, carried down and brought down, is a wildly common pitfall, and getting them backwards will completely throw off your entire trial balance. Don't let that happen to you.
Alongside the T accounts, you need to watch out for specific mathematical pitfalls, especially miscalculating percentages when dealing with trade discounts versus cash discounts. Let's actually test this right now. Here's a super common exam scenario. Calculate the final figure if a 5% cash discount is applied to a $500 accrued trade payable. Go ahead and pause the explainer right now, calculate it on your notepad, and write it down. I'll wait. Okay, ready? 5% of 500 is 25. Subtract that and you should have calculated $475. You must know exactly when and how to apply these discounts. Also, you simply cannot overlook the vital importance of state symbols in manufacturing accounts. Your goal in this whole phase is absolute 100% accuracy, so your financial statements actually reflect reality.
Next up, Section 3, Ratios and Evaluation. This is all about mastering Assessment Objective 3.
All right, now we elevate the discussion to Assessment Objective 3, or AO3. This is where we focus heavily on evaluation. Look, calculating a ratio, that's just a baseline skill. Identifying what that ratio actually means for the business's liquidity or profitability, that is what defines a true A-star response. You're often going to see the exam command word analyze. So imagine a scenario where a current ratio has plummeted from a healthy 2.5 to 1 all the way down to a very tight 1.1 to 1. And this brilliantly illustrates exactly the kind of critical scenario you might face on exam day.
When you see a drop like that, please don't just state the obvious. Interrogate it. Put on your examiner hat and ask yourself, why did liquidity drop? What is actually happening behind those surface numbers? You can't just write that the ratio fell. You have to dig in and evaluate the root cause.
To answer that question and secure those top marks, you need analytical answers. For example, has the business overpurchased inventory? If a firm buys way too much stock, well, that capital is entirely trapped sitting in a warehouse. That means cash is drastically depleted, making it incredibly difficult to settle short-term accrued expenses, like, this month's electricity bill or wages. Or are trade payables being settled way too slowly, causing suppliers to withdraw credit facilities? Or perhaps cash reserves have been heavily depleted due to massive capital expenditure, like buying a brand new factory? These are the exact analytical tools you need to construct a high-level A-star evaluation response.
Beyond just internal analysis, you also have to consider inter-firm comparisons. Different businesses operate with completely different accounting policies. For example, one firm might use the straight-line method of depreciation, while a competitor uses the reducing balance method. Let's do another quick interactive prompt. Think about it. If you evaluate a business using straight-line depreciation against one using reducing balance, which one artificially looks like it has higher early profits? Take a second, pause, and think. Okay, the answer is the straight-line method. Why? Because reducing balance charges much higher depreciation in those early years, which lowers the initial profit figure. These differing policies make direct, apples-to-apples comparisons incredibly difficult. As a top-tier student, you've got to look beyond the surface numbers to analyze the true quality of the profit.
And evaluating the quality of profit means remembering that not everything is recorded in a ledger. Off-book, non-financial factors are incredibly vital. Think about things like staff morale, the physical location of the business, or its broader market reputation. These factors aren't captured in the accounting records anywhere, yet they're absolutely essential for analyzing a business's long-term sustainability and its return on capital employed, or ROCE. A business might have perfectly balanced T accounts, but honestly, if their market reputation is tanking, that profitability isn't going to last.
Finally, Section 4, Examiner's Secrets to Success. Let's hear directly from the reports.
Okay, to wrap up, let's look at some advanced insights pulled straight from the 2024 and 2025 Principal Examiner reports. The examiners have highlighted some very specific do's and don'ts. First up, you absolutely must ensure legible handwriting in your ledger accounts. Why? Because if the examiner literally cannot read your broad down balance or your date column, you are not getting the method mark, even if the math was perfectly right in your head. Second, you must clearly distinguish between revenue and capital items. A classic mistake here is dealing with accrued installation costs for new machinery. Students so often record installation as a revenue expense, but it absolutely must be capitalized. Mixing these up is a major red flag that completely throws off your asset values and your profit. Finally, manage your time based on the question weightage. Don't spend 20 minutes agonizing over a 5-mark theory question. So the crucial point is, don't let marks needlessly vanish just because of messy handwriting or poor time management when you actually know the underlying accounting principles.
So I want to leave you with this final, provocative thought. Next time you sit down to tackle accrued and prepaid income, ask yourself, are you just blindly recording the data? Are you actually telling the complete financial story? True mastery of IGCSE accounting is really about uncovering that bigger picture. Keep your equations balanced, keep your mind critical. Keep this blueprint handy, maybe re-watch those worked examples, and go secure that A-star. You've got this. Happy studying!